In this Bybit tutorial, I'll demonstrate how to short and long Bitcoin and various altcoins with leverage. Bybit offers a range of functionalities including stop loss, trailing stop loss, mutual insurance, and more. I'll also explain how you can get a $200 bonus exclusively for viewers of this tutorial. Before we dive into the content, subscribe to our channel and hit the bell icon for notifications. Your support means a lot. Let's dive into the details to help you use Bybit profitably and responsibly. Bybit is gaining popularity as a derivatives trading exchange for Bitcoin and altcoins due to its excellent customer service, high liquidity, and smooth trading experience. Launched in 2018, it boasts 15,000 daily active traders, or 1.5 million registered users. Bybit's liquidity is evident in the spread between bid and ask, which is lower compared to other exchanges like BitMEX, FTX, Huobi, and Binance. Now, let's move on to the tutorial. First, I'll provide an overview of Bybit's trading interface, including the chart, order book, recent trades, and positions. Then, I'll guide you through the registration process. Bybit doesn't require KYC, making registration quick and easy. Next, I'll show you how to make a trade on Bybit. You can choose between perpetual contracts, inverse perpetual, and USDT perpetual. The difference lies in the margin used for these positions. Inverse perpetual contracts are coin-margined, meaning they're backed by cryptocurrencies like Bitcoin, Ethereum, EOS, or XRP. On the other hand, USDT perpetual contracts are USDT margined, with USDT as the underlying asset. Choosing between these options depends on your trading strategy. If you're bullish on Bitcoin, coin-margined pairs may be preferable since profitable positions yield more Bitcoin. Conversely, if you anticipate a significant decline in Bitcoin's value, USDT perpetual contracts might be more suitable, as you'd earn more USDT on short positions. Ultimately, your choice depends on your market outlook and trading preferences. Personally, I tend to trade Bitcoin using coin-margined pairs, but for shorting altcoins expected to depreciate significantly, USDT perpetual contracts could be more appropriate. Alright, let's continue. As soon as Bitcoin reaches $13,150, our limit order will be triggered and our position will be opened. Now, let's discuss the different order types available on Bybit. When making a trade, you have the option to place limit orders or market orders. There's a significant difference between the two. With a limit order, you'll receive a fee rebate, essentially getting money back for using it. This is because limit orders add liquidity to the order book, enhancing market stability. On the other hand, market orders incur fees because they remove liquidity from the market by executing at the best available price. Using a limit order makes you a market maker, while a market order makes you a market taker. Market orders guarantee execution, but may result in less favorable prices. Conversely, limit orders offer potential price improvements, but aren't guaranteed to execute. Now, let's walk through placing a limit order on Bybit. Suppose we want to buy Bitcoin at $13,150 with a leverage of 5x. We'll enter $13,150 as the limit price and specify the order size. We'll also set our take profit and stop loss levels at $14,000 and $12,900, respectively, ensuring responsible risk management. Additionally, we'll select the post-only option to ensure our order remains a limit order and qualifies for the fee rebate. It's essential to always use stop losses to mitigate potential losses and avoid liquidation. Liquidation occurs when the price reaches a level where the exchange automatically closes your position to prevent further losses. Once all parameters are set, we'll review our order details, including the liquidation price, to ensure we're comfortable with the risk. After confirming, our limit order will be placed and displayed under the Active tab until triggered. In summary, Bybit offers various order types and features to facilitate efficient and responsible trading. Whether you're a seasoned trader or new to the game, it's crucial to understand these functionalities and employ risk management strategies to safeguard your investments. That concludes our tutorial on placing a limit order on Bybit. If you found this video helpful, don't hesitate to share it with others who may benefit from it. Now, let's wait for our order to be executed, and until then, happy trading. It allows you to minimize risks and make up for losses by ensuring your earnings. Essentially, it acts as a form of protection against adverse market movements. By clicking Learn More, you can access detailed information about how mutual insurance works and how it can benefit your trading strategy. Overall, Bybit provides a comprehensive set of features and tools to facilitate effective trading. From placing limit and market orders to utilizing conditional orders and trailing stop losses, traders have access to a range of functionalities to manage their positions and mitigate risks. Additionally, Bybit's unique ability to allow simultaneous long and short positions with linear contracts provides added flexibility for hedging strategies. This feature sets Bybit apart from other derivatives exchanges and can be particularly useful in volatile market conditions. For charting, while Bybit offers its own charting tool, using TradingView is recommended for its advanced features and comprehensive analysis tools. Whether you're a beginner or an experienced trader, utilizing TradingView can enhance your technical analysis and decision-making process. Lastly, Bybit's mutual insurance feature offers an additional layer of risk management, allowing traders to hedge against market fluctuations and protect their profits. In conclusion, Bybit offers a robust platform for derivatives trading, coupled with various features and tools designed to empower traders and enhance their trading experience. Whether you're executing simple trades or employing complex strategies, Bybit provides the necessary tools to navigate the markets effectively and responsibly. The mutual insurance feature offered by Bybit serves as a risk management tool for traders, providing an alternative to conventional stop-loss and take-profit mechanisms. Unlike stop-loss orders, mutual insurance compensates traders if the market moves against their position, while still offering rewards if the market moves in their favor. By choosing different durations for insurance, such as 2 hours, 12 hours, or 48 hours, traders can tailor their risk management strategy to suit their trading style and market conditions. This insurance is especially valuable in the volatile cryptocurrency market, where large price swings can occur rapidly. Bybit's diverse coin offerings include popular cryptocurrencies like Bitcoin, Ethereum, EOS, XRP, Chainlink, Litecoin, and Tezos, among others. Moreover, the platform provides various promotions, rewards, and referral programs to incentivize traders. Additionally, Bybit's low trading fees, competitive pricing, and innovative features, such as the ability to exchange cryptocurrencies directly on the platform, distinguish it from its competitors. Regarding margin trading, Bybit offers both isolated and cross-margin options. Isolated margin allows traders to limit their potential losses to the amount invested in a specific position, promoting better risk management. On the other hand, cross-margin utilizes the trader's entire equity for a position, which can be beneficial for avoiding liquidation, but carries higher risk. Bybit's calculator tool facilitates traders in calculating potential returns and liquidation prices, aiding in informed decision-making. Phemex emerges as a significant competitor to Bybit, offering similar features along with distinctive functionalities like sub-accounts. However, BitMEX, another competitor, imposes KYC requirements and faces issues with system overloads, making it less favorable compared to Bybit and Phemex. Bybit's fee structure, similar to BitMEX and Phemex, rewards liquidity provision through maker rebates while charging taker fees. Utilizing limit orders can mitigate trading fees, benefiting traders in maximizing profits. Trading strategy. Opt for limit orders to minimize fees and prioritize critical stop losses for risk management. Utilize Bybit's funding rate to balance long and short positions, potentially earning rebates for trading against market trends. Bybit app features. Bybit's mobile app offers advanced charting tools and strategy alerts, enabling traders to make informed decisions on the go. Features include breakout signals, trend-following indicators, and real-time market heat signals. Customer support. Bybit stands out with exceptional customer support, providing prompt assistance and issue resolution. This sets it apart from competitors like BitMEX, known for subpar service. Platform review. Led by CEO Ben Zhou, Bybit has become a leading exchange for Bitcoin derivatives trading. Its robust infrastructure supports high transaction volumes with no order overloads, ensuring smooth trading experiences. Security and risk management. Bybit prioritizes security, storing funds in cold wallets, and employing manual withdrawal verification processes. Traders are encouraged to use risk management tools like stop-loss orders, hedging, and insurance. Conclusion: Bybit is considered a safe platform for trading, with a reputation for reliability and customer-centric services. Its advanced features, high transaction capacity, and commitment to security make it a preferred choice for cryptocurrency traders. Hope you found clarity and understanding in every part of this video. Don't forget to subscribe, like, and hit the bell icon for more. Thank you for watching, and see you in the next one.